Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Russell from MMTAXMAN.com, and I have Patrick Russell, EA, as well from MMTAXMAN.com. And on today's topic, we're going to talk about holding a company through an S Corp, right, Patrick?
Very good, Veronica. Good morning, everybody. We're going to continue this topic of having a parent versus a subsidiary matrix with your various businesses. And today we're going to talk about it from the standpoint of an S corporation owner. The last conversation we had was from the LLC. And when you talk to business owners, they typically will always compare the LLC versus the S corporation. The S corporation specifically because it's also considered a flow-through entity, meaning the tax return for the federal side is only filed for informational purposes, but the income and losses will be reported on the owner or owner's personal tax return through the course of a Schedule K-1 reporting, hence the flow-through dynamic. Well, so you have that same dynamic with the LLC, but today we're going to be talking about the S corporation. Now, understand that the S corporation is a much more statutory created entity by the IRS. What the hell did you just say, Pat? There's an actual chapter in the IRS code dedicated to S corporations. It's where it gets its name. It's the S chapter of the IRS code. Not so with the LLC. The LLC was a litigious creature that came later that to this day, the IRS has not actually created a separate chapter or a separate form for the LLC. It simply just falls under the coverage of a partnership. And if you recall, an LLC multi-member, they don't even have a separate form, right? The LLC just follows the 1065, which is the same form for a general partnership. And why does that matter? Because now with the S corporation, you have much more stringent rules. It's very much more robust, and you have a lot more limitations of what you can do with an S corporation, to include who can own S corporation stock. Two people. You've got individuals, and they can be U.S. citizens or just U.S. residents, an individual, or it can be a living trust, a revocable living trust where the grantor still has essentially the same rights and authority and powers as the original grantor or owner. They're able to own S corporate stock. But let's just stay with the individuals, meaning so other partnerships and other corporations are not allowed to own S corporate stock. So what do you need to have subsidiaries for? Comes down to this. The IRS has rules governing what and how many different types of businesses you can file under one tax return. Did you know that when you file a tax return, Veronica, we have to identify the actual industry that we're being reported on, whether it's a retail or a factory or real estate? We have to give the NAICS code, correct? Which just identifies the industry. Why does the IRS need to know this? For policing and auditing purposes. They want to compare your revenue and your expenses versus the national average or whatever tables that they have in order to compare apples to apples. Now, what if you have two separate businesses though, Veronica? What if on one side you have a restaurant and then on another side you have a car dealership? And let's say the car dealership is doing great, but you also have a loss from the restaurant that you would love to be able to use to offset your revenue from the successful business. Can't do that unless you make an election with these two corporations. First, you have to make them as corporations. Softball question. In order to make the election, what's the form number to turn a corporation to an S corporation?
2553. That's the form that you have to fill out and complete and fax over to the IRS.
Very good. So that's first step. Once you get the 2553 and the S corporation designation approved, then you can make one other election, and that is the Qualified Subsidiary S Corporation Election, or Q-Sub. And that comes with the form 8869, another form that you can look up, a one-page form, in order to tell the IRS that you're making the election to have your restaurant S Corporation now be considered a Q-Sub of the parent S Corporation, which you can make the dealership. And now, by de facto, instead of having two companies that one is having a loss all by itself that it can't use and then a profitable company that you would otherwise pay taxes on, you can now blend those two companies together even though they're in separate industries. And now the parent is assumed to have just absorbed the Q-sub's assets, liabilities, income, and deductions. Long story short, once the 8869 is approved and your S corporation is considered a Q-sub, you no longer need to file a separate tax return for the Q-sub. Everything is just assumed to be added onto the parent S corporation's Form 1120, which means that at the end of the year, you would have to blend in your financials from the restaurant into the financials of your successful car dealership. And whatever the net result would be what you would report to the 1120, Form 1120 S, which then now have, instead of two K1s that you have to report, you now have one netted out K1 coming from the parent S corporation. I don't think I can get more wonkier than that, can I, Veronica?
No, I think this is just the all the information that the client might need. Keep in mind that, once again, I want to refresh the idea of if you're in California or in another state, you have to make sure that there's a fee that you have to pay for opening, either an
the
LLC,
minimum franchise fee. And in California, what is that fee?
$800.
$800 every year, even in years that you may not have any activity or losses. That $800 franchise fee is due. Now, each state has a different franchise fee, including some are, genuinely speaking, zero if you have no activities in gross revenue, right? So be mindful that every state, you need to check with the Secretary of State to find out what rules would apply to you. Last point, the three things that I really wanted to get out of this conversation was that the IRS typically only wants one type of business per tax return so that they have the ability to compare their national tables or their local tables with the tax return that you're submitting in based on gross revenue, and then comparing that to what level of expenditures that you are reporting for the year, right? So the idea of blending two completely separate industries into one tax return is generally not allowed. But with S corporations, you do have the ability to make the Q sub election. So that's one things that I really wanted to get out there. The second thing I wanted to get out there is the reason the S corporation does have its own separate chapter in the IRS code. So it is a statutory animal of the IRS, not the LLC. The LLC is actually a statutory animal of the states. And the IRS has been really catching up on a litigious and rule basis ever since, and simply just going with the partnership rules and regulations to include not even a separate form, just use the 1065. That's the second thing. And then, of course, ownership of an S corporation. One of the big drawbacks that really makes the LLC much more popular nowadays than the S corporation is the limitations on not only who can be owners of an S corporation, simply basically individuals, sure, certain states, but mostly just individuals. But the idea that oh gosh, what was that last part?
Yeah, well, that was the last part. But I mean,
that was the last part.
It is a lot of information. But we're gonna come back with another webcast. If you do have questions, let us know. We're here 24/7. Email us at mmtaxman@gmail.com. Patrick, final point.
Guys, a quick way to get quick answers to use the comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis. But lend your voice to the show. It'll make it a whole lot more fun. We're going to swing back around. There is a lot more to discuss as far as S corporations and the limitations on that. But I think you guys got the main point. Besides, nowadays, LLC is the entity du jour. Guys, have a great day. We'll be talking to you soon.